Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com. Welcome back, Chris.
Hey, thanks for having me, Ivan. Always a pleasure.
Yeah, it's a pleasure having you back on Wall Street Silver. I wanted to get you on to talk about all the turmoil that's happening in the markets, the craziness. Make some sense of it, Chris. There's everyone online is talking about all the turmoil in the markets. What are you seeing right now?
Yeah, I'm hearing a lot of people. I'm getting a lot of calls, emails, people saying like, "What's going on?" Like everything's all haywire, everything's crazy. And that's the reality of it. People want to get a hold and they want to know what to do right now. And nobody wants to hear this, but believe it or not, if money is kind of going everywhere, sporadic, it's piling out of the Magnificent Seven, which that pullback in those stocks has created fear in the market. We've seen the VIX shoot up, the fear index, so people are scared. And that fear has actually caused a lot of selling in even precious metals. We saw lots of liquidation. We saw gold pullback, silver, and miners.
Right.
Yet money, even though there's scared money and it's flowing out of the big techs, it's piling into the small cap stocks. It's piling into real estate like IYR, real estate ETF, into home builders. People, I think, are just moving to a totally different. They're saying, get me out of big tech and put me in real estate or
Right.
small cap stocks that are completely disconnected. So money is like piling in, piling out of different stuff, and it's just chaos. And the reality is, if you don't know what's going on and everything is completely random and everything's kind of just gone haywire, we sit on the sidelines. So we moved to the sidelines about a week and a half ago. And because we could see this happening, the internals of the market, the money flows, what different assets were doing, it was telling us that nobody knew what was going on. And there's all kinds of wild cards with Bank of Japan changing rate, raising rates, and the
Right.
UK potentially lowering rates. So um, when there's chaos, sometimes the best thing is just sit aside. I mean, it is summer. This is the best time to go out and enjoy summer. We've moved to cash. Go enjoy summer, and it could be chaos for like a month or two. So you got to take advantage of it. If there isn't clear direction, go do something else where there's clear fun.
Yeah, no, I totally agree with that, Chris. Now, a lot of people too are talking about because there's so much turmoil in the markets, the stock market, and not a lot of people are moving so quick to, let's say, the mining stocks for silver and gold either. A lot of people are saying that now's not the time. What do you see with the silver and gold mining sector?
Yeah, I'm still bullish on them. When you look at gold, silver, and even miners on the weekly chart or the monthly chart, they have very strong bullish chart patterns.
Right.
Gold, to me, gold and silver have the strongest chart patterns. Actually, gold, silver, and Bitcoin all have very big, strong patterns pointing to higher pricing. Gold miners on the other side, they've put in a multi-year bottoming formation. They're starting to rise out of that base. They do have a bullish chart pattern, and they just don't look quite as exciting. And I think that has to do with, I don't think we're at the phase where gold miners are going to shoot up hundreds or thousands of percents. I think that's going to
Right.
happen after we have some financial reset. So right now they're in favor. They're doing well, but they're not. They're stuck in the stock market. And if the stock market has got panic selling, which we see in the VIX, and selling in general, the stock market, you got to look at the stock market as one asset. And it doesn't matter
Right.
how many, it's like one basket with a ton of stocks. If the stock market's going down, almost all the stocks in it are going to naturally get pulled down. And because gold miners are stocks stuck in that basket, if the stock market doesn't shoot higher, they're going to struggle.
Hey everyone, I just found out about this local coin shop, Greenville Gold and Silver, that sells high quality used gold and silver jewelry by weight. You can invest in precious metals at crazy low premiums and show your swag at the same time. Some pieces sell for just a few bucks. They have the best prices, best selection, and new pieces regularly. And if you ever need to cash out, your metal value is secure. Greenville Gold and Silver, check out the link in the description below. Thanks.
So I like gold, silver, and Bitcoin because they're actually out of the stock market. They're commodities and crypto. They're
Right.
totally disconnected. So they can keep moving while miners might struggle a little bit here going forward.
Do you see a tech bubble popping, and what will that do to the rest of the market, Chris?
Yeah, the big question, we're at a tipping point here. Like, has it popped?
Right.
And are we just setting up for a little bit of a bounce before we go lower? I'm not sure. I've eventually there's going to be a tech bubble burst.
Right.
We'll see everything go down. But it hasn't broken down yet. I wouldn't say it's popped. All it's done right now is it's had a very sharp pullback, but that's what happens after you have a very sharp rally. And
Yeah.
this isn't out of the norm. It could recover from this and hit new highs. The stock market, I still see there's potentially 6, 7, 8% upside in the NASDAQ or the SP 500 if this market was to recover. So, yeah, I mean, I'm not one for trying to so much predict. We just follow the price action.
Right.
But the bubble has not popped yet. It hasn't gotten that ugly. So we need to see what happens probably over the next 2 to 4 weeks. We'll probably see the daily chart build out of what the large techs are doing and the stock indexes are doing. And then however that pattern builds and where money's flowing between gold and utilities and different asset classes like that, that'll give us a gauge of be like, okay, the stock market's setting up for another leg down. It's about to get real ugly, or it's just found a bottom and it's actually showing signs that we're about to go higher. So we just have to give it time. And really, it couldn't be a better time to do that, which is do nothing and go enjoy summer.
Yeah, what I was gonna say, what percentage, uh, like what percentage of your basically investment or portfolio is in cash when there is uncertainty in the stock market?
So we moved to 100% cash about a
Oh,
week and a half ago.
really?
Yep, yep. We got out of the SP5. We had half the portfolio in the SP 500, half of it in the Nasdaq. The market internals, cycles, money flows, they all changed. Our strategy said, "Hey, get out. Stuff's starting to go weird. Big
Really?
money's starting to rotate out." So we exit, and now the markets have pulled back and they're falling. So 100%, markets are going down and we're just collecting our interest every day. We get a month. We're just a BIL, which is there's really no downside risk. You earn daily interest and a monthly dividend payment. So we just sit there and watch our account inch its way higher while chaos
Yeah.
hits the markets. So
Until you see something that it'll change your thinking, and then you're
yeah, we
gonna
don't want to be in BIL. We only want to be in it when there is nowhere safe. There's no
right.
definitive asset. But the second something gives us a signal, could be the US dollar index ETF, could be bonds, it could be the stock indexes. As soon as one of those gives us a signal, we'll jump into those because we want to continue to grow our account.
Absolutely. What concerns you the most in this market?
I would just say it's been like the big flow into the big heavy tech stocks.
Yeah,
When
that's
you
the big
look at
concern.
like the small cap like Russell 2000, the micro cap index, the equal weighted SP 500 index, which more or less removes the big heavy techs, you can see what the majority of stocks are doing. There's thousands and thousands of stocks, yet 7 of them are doing all the heavy lifting. But all the other ones, when you put them all together and then chart it out, you'll realize, holy crap, this is like a signature topping pattern in the market
Right.
that most people don't see because they don't put all these together. They just look at the SP 500, the Nasdaq, and they're like, we're in an uptrend. But really, it is very weak. There's market is super brittle. And when the big techs do break down and start a significant downtrend, I mean, it's going to pull the whole market down with it. And it's going to be like every man for themselves. You can either profit from it, you can either avoid it, or you can ride it down and lose your shirt. So you've got 3 options.
Yeah, probably there's probably going to be a lot of people losing their shirts.
Oh, there always is. Yeah.
Yeah. What about the commercial real estate sector? There's so many banks like Bank of America and so on with billions and billions of dollars of unrealized losses. When do those unrealized losses in the commercial real estate sector for these big banks become realized, or do they just never become realized? I was talking with Rafi Farber this week, and he said they won't become realized because the Fed will just come in and buy it.
Yeah. I mean, I would say like the US economy is like a game of Monopoly, and the bank is they just cheat. The bank's bankrupt, but they just keep making more money and giving it out, right? So
Right.
it's like it feels like everything now is too big to fail, and they're just going to keep doing whatever. But that eventually is going to kill the currency. It's going to eventually make other assets do well, like probably precious metals, things like that. Um, when does it realize? I don't know. I think we'll probably see like the small regional banks blow up because they're too small to win.
Right. Yeah, that's true. They'll get gobbled up by bigger banks.
They'll get gobbled up or they go bankrupt. I mean, there's so many banks in the United States. Canada, there's like 5. In the United States, there's like 2,800 or something like that, or
Yeah, there's
more different
the
individual privately owned banks. So they're all pretty brittle. The government's not going to bail out a little family bank, right? But they're going to bail out JP Morgan or whoever the heck needs it that holds the majority of the US homes or debt. So there'll be some fandangling, some scheme that'll try and save the day, but in reality, I think investors know what's going on behind the scenes. And just like in 2008, I think we'll still have a market collapse and they'll get bailed out, but um, things won't go, those big banks, I don't think are going to go out of business, but they're definitely going to be weak and everybody's going to know it. And they're going to dump shares and drive prices down.
Absolutely. Speak a little bit about asset revesting, the book.
Yeah, so asset revesting published that last year. So this is kind of like a new category, a new, there's the buy and hold, which is a guaranteed you're going to have one heck of a roller coaster ride when we have a bear market. And then you got active traders on the other side, which 97% of active traders lose money over a 300-day period. It is extremely difficult.
Wow.
Asset revesting is doing what I've kind of been mentioning to you is we identify market trends. We can identify how strong those trends are and we move our money into whatever asset has the lowest risk and the best upside potential. So we'll move all of our money into that asset. Could be the indexes like the SP 500 and NASDAQ, could be bonds. As soon as they give us a sell signal and say, hey, listen, the trend has come to an end, we move out and we look at a different asset within. We have a hierarchy of which assets we move to. So if stocks aren't favorable, we'll move down to bonds
Right.
or the US dollar index. So we just rotate, we reinvest our capital into whatever asset's going up. So we're always holding something going up.
And
And
now it's just cash.
and right now it's just cash, and we earn about a third of a percent, interest a month,
Right.
sitting on the sidelines safe, but there's no downside. And so it doesn't matter
Yeah.
what happens. We're actually still growing. It's just not super fast. But if we were to just even hold BIL, we'd still be making 5% a year if we had to hold on to it for a while. So it's not a
Wow.
lot of money, but it is nice to watch your account go up slowly. Well, everyone you know around you is losing their shirts.
Yeah, and I'd rather take the 3 to 5% than everyone losing like yeah, all their shirts. And yeah, it's gonna be crazy in the next year or so.
Yeah.
But Chris, it's such a huge pleasure having you come down to Wall Street Silver. As always, what a breath of fresh air when you come on. Thank you so much for coming down to Wall Street Silver.
Thanks, Ivan. Always a pleasure. Take
Yeah, no,
care.
talk to you soon.